Subadra Rajappa of SocGen writing this. While recent data is supportive of rate cuts sooner than we anticipated, the market might be getting ahead of itself, pricing more than 3 cuts by January and nearly 6 cuts by the middle of 2025. Subadra's with us for more. Subadra, good morning.
Good morning.
The official house call at SocGen was no cuts this year. It feels like September might happen. Before we get there, I want to talk about the bigger view from you and the team. Challenging really this view that once you start, they keep going. What's the pushback to that?
The fact that the data has been relatively strong, right? It's something that the Fed has to kind of recalibrate as we go along. If you listen to what Fed Chair Williams, the New York Fed president said, he basically said that that they're trying to move into less restrictive policy. So they're not really talking about embarking on a very aggressive path of rate cuts or even any sort of a cadence of once a meeting or once a quarter. So they're going to be very, very data dependent once they start. So, kind of drawing the analogy with the ECB, they cut rates in June, and SocGen rightfully called it a data independent rate cut. So, again, coming into the end of the year, they're going to be faced with questions about unit labor costs and how the data is progressing. So it's not certain to us that the ECB is going to be cutting every meeting. So the Fed might very well be in the same situation where they're going to have to recalibrate as we go along as they move away from restrictive policy.